The stock market is the best wealth creator in the entire world, yet remains a confusing concept for a lot of people. In fact, most people don't know the stock market basics. When it comes to investing, many people wonder where to start. It's difficult to pick a single starting point with so many strategies out there. That's why I'm here, to help you get started and launch your investing. Today, we'll cover the basics such as what the stock market is, how the stock market works, and how to invest in the stock market for beginners. When you understand the stock market basics, you'll be able to enter the market with the knowledge you need to create incredible wealth. Let's get started. Stock market basics. There are a few things every investor should know before entering the stock market. When you master these basic investment terms and principles, you will be able to make smart investment decisions. What is a stock? A stock is a type of security that gives investors a share of ownership in a company. In other words, when you buy a stock in a company, you then own a tiny piece of that company. When you purchase stock in a company, you can choose to purchase one tiny piece or many tiny pieces. The number of individual stocks you buy is also called your share or shares. When the stock price goes up, the value of your shares increases, and so does the return on your investment. In order to buy a company's stock, it typically has to be publicly traded on a stock exchange, such as the National Stock Exchange. This brings us to our next stock market basic. Stock exchange. Stock exchange market is a vital component of a stock market. It facilitates the transaction between traders of financial instruments and targeted buyers. A stock exchange in India adheres to a set of rules and regulations directed by Securities and Exchange Board of India, or SEBI. The said authoritative body functions to protect the interest of investors and aims to promote the stock market of India. What is the stock exchange? The stock exchange in India serves as a market where financial instruments like stocks, bonds, and commodities are traded. It is a platform where buyers and sellers come together to trade financial tools during specific hours of any business day while adhering to SEBI's well-defined guidelines. However, only those companies who are listed in a stock exchange are allowed to trade in it. Stocks which are not listed on a reputed stock exchange can still be traded in an over-the-counter market. But such shares would not be held high in esteem in the stock exchange market. How does it work? Mostly, a stock exchange in India works independently as no market makers or specialists are present in them. The entire process of trading in stock exchange in India is order-driven and is conducted over an electronic limit order book. In such a setup, orders are automatically matched with the help of the trading computer. It functions to match investors' market orders with the most suitable limit orders. The major benefit of such an order-driven market is that it facilitates transparency in transactions by displaying all market orders publicly. Brokers play a vital role in the trading system of the stock exchange market, as all orders are placed through them. Both institutional investors and retail customers can avail the benefits associated with direct market access, or DMA. By using the trading terminals provided by stock exchange market brokers, investors can place their orders directly into the trading system. What is a broker in stock market? A broker is a middleman between buyers and sellers of individual stocks, index funds, exchange-traded funds, and mutual funds. Every individual investor needs to go through a brokerage or stockbroker to purchase stock. You can either partner with a broker who will engage in buying and selling activities on your behalf in accordance with your goals for a fee. Or you can use an online brokerage firm and do all the buying and selling yourself. What is the stock market in simple terms? An easy way to think about the stock market is to consider it as a network of stock exchanges where traders and investors buy and sell shares of publicly traded companies. Private companies list shares of their stock on an exchange through a process called an initial public offering. What is stock market example? Some examples are exchange-traded funds, stock index and stock options, equity swaps, single stock futures, and stock index futures. These last two may be traded on futures exchanges or traded over the counter.
Thank you for watching.